Yeah, hello and welcome back, everybody. This is now the promised training case concerning the interest barrier. And naturally, the first thing we are going to do is to take a glance on the case situation to see what it's all about. XAG is from Xanten in Germany. It is a 100% subsidiary of an Italian parent SPA, so that's an Italian AG or stock corporation, and the Italian parent company has seat and place of management in Rome, Italy. XAG has an accounting period which is identical to the calendar year. It has a commercial profit of 1,617,000 euro. Naturally, the word million there, yeah, cross that out. It has an Ebitda carry forward from last year of 1 million and from 3 years ago of 2 million euro. Furthermore, XAG has a loss carry forward of 20 million. During the computation of the commercial profit, the following events have been taken into account. You know that introduction from other corporation tax cases already. An interest payment to the parent company in Italy was 20 million. Adequate interest would only have been 50 million. The 20 million have been deducted as interest expense under commercial law, and under commercial law, that's even correct. Donations to charity, 500,000 euro. Depreciations were made in commercial accounting with an amount of 20 million. From the perspective of German tax law, only 12 million would have been allowed. Remunerations for members of the supervisory board of XAG. You know, a stock corporation in Germany always has to have a supervisory board. 1 million, so rather generous. Corporation tax and trade tax payments and the expense necessary for provisions made for the final payments in both tax cases. In total, the expense was 3,233,000. Good. And dividends from a German subsidiary were received with 1 million. The participation is 30%. Now, we have also gains from selling shares in a foreign subsidiary where we own only 9% of the part of the foreign company. The gain was 2 million. We have interest which we received from another subsidiary, 100% participation in the foreign state of Abrodia, which is, as you can imagine, abroad. 10% was paid as interest on a credit amount of 1 million, which we gave them. Adequate would have been an interest rate of only 5%, but in the computation of the taxable profit in the country of Aberdeen, the full 10% could be deducted and have indeed been accepted as a business expense. And the last thing we need to know is now that we have interest which was paid to banks with an amount of 5.5 million. So, ladies and gentlemen, that's everything which has to be taken into account for this case. And now, naturally, if you want to practice a bit your knowledge, then there is now one important recommendation. Press the button for pause. So give the video a break, copy the screen, or let this task here on your screen fully visible, and then it's clear what comes next. Take a sheet of paper and try to solve the case, and only afterwards go on, watch the rest of the video and compare your solution with mine. Okay, so enjoy the break button. Take a piece of paper. No, a sheet of paper. A small piece would not be sufficient. A pen, take a brain, and probably a tax act translation, and then begin to work. Well, I also have a small break and then come back with a solution. Thanks. Okay, so let us have a look. What can we do here with that case? First, naturally, we begin at the beginning. That's personal tax liability. And that is something which you already know from other cases. Tax GmbH is unlimited tax liability under the KSTG, paragraph 1, number 1 KSTG, because of seat in the inland or of place of management in the inland, and that's Xanten, just to be on the safe side. Now let's analyze the events, and here, as it is an AG, we have again the possibility to start our solution with general introduction, which says the tax base is the income, and it has to be computed according to the rules of ESTG and KSTG. See paragraphs 7.1, 7.2, 8.1 KSTG. And all income is deemed to be income from business because it's one of the legal types which is listed in paragraph 1.1, number 1 to 3. So it's a legal form which is explicitly designed for doing business, and so the tax legislation assumes, without the possibility to disprove the assumption, it assumes everything is income from business. You remember that simplification rule. So the tax base is the profit for 2 number 1 ESTG, and the tax base is to be computed by balance sheet. That's 4.1 ESTG based on the commercial balance sheet. See paragraph 5.1 ESTG, which says deviations are only possible where tax law demands or at least allows them. Now, the last of our 3 simple questions is usually the point of time when the money has been earned. So here the accounting period is the calendar year. So all of the profit of X GmbH is deemed to have been earned on 31st of December. See paragraph 7.4 KSTG or paragraph 4A2 number 2 ESTG, which basically says exactly the same. Now, due to all that, the commercial profit is the starting point for the calculation of the tax profit, 1,617,000 euro. So now we only have to check if all the events which are noted here have been treated in the right way. Interest payment 20 million, adequate only 15 million. That's clear. The payment contains a hidden profit distribution from XAG to P in Italy, PSPA. of 5 million because the interest rate is higher than a careful and responsible manager would have accepted if he or she had not had to take the wishes of a shareholder here of P into account. So 5 million are not interest and not a business expense. So they are a dividend hidden and that are not deductible. Paragraph 8.3 sentence 2 KSDG says that, and so adjustment of the profit by plus 5 million euro. And let's turn to the next event or interest of 50 million stays a business expense. Now 2.2 donations. They are deductible up to 20% of the income. That was 9.1 number 2 KSTG for those who want to look it up, and you should look it up as always. 9.1 number 2 KSTG, this limit can not yet be calculated at this point. So temporarily all donations are reversed or are added back, let's call it this way, to the profit. We have an adjustment of plus 500,000 to the profit. 2.3, ladies and gentlemen. Let's have a look. The depreciations. Naturally, depreciations can only be claimed with the tax allowed amount of 8 million, 12 million, no, 20 million have been made under commercial law. So definitely 12 million have to be cancelled, removed, added back, however you call it. So plus 12 million is the change for the profit. Well, and let's go on. 2.5. Supervisory Board remunerations. You remember perhaps that these were only deductible with 50% of the amount, so only with 500,000. Until now, commercial balance sheet, 1 million has been deducted. So that leads to a correction of plus 500,000 to the profit. 2.6 dividends received. A, the revenue, 1 million was received, is tax-free under paragraph 8b1 KSDG because the participation is higher than 10%. See paragraph 8b4 KSDG. That means since up to now the 1 million has fully been booked in commercial law as revenue, we have to eliminate it by deducting that amount again. And the expense consequences, 5% of the 1 million are seen as non-deductible expense under paragraph 8b5 KSTG. So minus 50,000 have to be eliminated from the P&L, and so we have to reverse that by plus 50,000. 2.7 gains from selling the shares. The gain is tax-free under paragraph 8b2 KSTG, that the participation is only 9% less than 10, does not matter for paragraph 8b2, only for paragraph 8b1. C 8b4 KSTG. So the consequence is we have a profit of 2 million, which until now we have shown as revenue, so they have to be eliminated from the profit by deducting them again. Then we have again an expense aspect of that. 5% of that amount, my God, have to be seen as non-deductible. And this time, a frequent mistake, the 5% lump sum rule for gains from selling shares is in paragraph 3 of 8b and not in 5. Now this is an amount of, oh my God, let's have a look. It seems to be 100,000, which is added. Okay. Now let's turn to a new page, because 2.8 interest received from a subsidiary in Aberdeen. Again, the first aspect is the interest contains a hidden profit distribution which XAG received. So they received a dividend, a hidden one, of 500,000 euro. No, not 500,000. Hmm. 50,000. Oh my God. 50,000. 10% would be 10% of the credit of 1 million would be 5. Yeah, you know, it would be 100,000, and half of it is only adequate. Only 50,000 are to be seen as genuine interest in that case. Okay. Now, so profit adjustment by plus 50,000 euro, because no, again I was not concentrated enough. Here is something else. The dividend should normally be tax-free under paragraph 8b1 KSTG, but there is, remember that, the corresponding treatment principle. If a hidden profit distribution was not treated as such where it came from, then it is not tax-free in the hands of the recipient. See paragraph 8b1, and I believe it's sentence 2 KSDG. Now, if the negative consequence, a hidden profit distribution, is not a business expense, has not taken place, then also the positive consequence, there is a reduction on the tax of the dividend here in exemption, does not take place, so that it is a dividend, but that dividend is fully taxable. And as this is fully taxable, we got 50,000 interest and we got 50,000 taxable dividend. There is no change in the overall profit. 2.9 interest paid to banks, 5.5 million. That's a business expense, no corrections. Paragraph 4 for ESDG. Okay, number 3. Adding it all up, let's begin with the first calculations. It might be a good idea to test the provisory tax profit before interest barrier, and let's have a look on that. Here we have 1,617,000. We have, because of event number 1, plus 5 million, because they were a hidden profit distribution. Because of event number 1, we have plus 500,000. Because of event number 3, we have plus 12 million. Because of event number 4, we have plus 500,000. Because of event number 3, we have 2 million, plus 3 million to 33,000. Because of event number 6, we have A minus 1 million and B plus, what was it, 50,000? Was it 50,000? 50,000. Because of number 7, the tax-free gain, we have under number A a correction of minus 2 million because we completely eliminate that tax-free gain. B, we have the lump sum, that was plus 100,000. Then we have under entry number 8 no correction at all. We have under 9 no correction at all, so we end up with a provisory profit, and that is something for which you probably best take a calculator and try to determine that just now, or I assume if you really made the recommended break and try to solve the case in advance, then you probably already have that result here. And if I'm not completely mistaken, that leads, and I might be, so check it, but that seems to lead to a total of 20 million. So if that is a total of 20 million, what are our next steps? Now we have to apply or check the interest barrier. So the first question is naturally, will we have to apply the interest barrier? The first step is, let's calculate the net interest expense. So all interest paid, that is what, ladies and gentlemen? Well, We have paid under position number 1 interest of 15 million, not 20 million, because the interest is not acknowledged to be 20 million. Tax law says, no, this is only 50 million. The rest is a hidden profit distribution. And if it is a hidden profit distribution, it cannot be interest. You have, from the logical perspective, only the one alternative or the other. So we have only 15 million interest. That is clear. So another interest which we paid to banks under 9 is 5,500,000, and all interest received is now under paragraph 8. Well, we received 10% on the credit of 1 million, so 100,000, and so we only received 50,000. That leads to a shocking result, because 20,500,000 minus 50,000, that means 20,450,000 euro net interest expense. Now let's go to second step. Calculate the Ebitda limit. You remember 30% of the Ebitda. But what else can we remark in between? We have a net interest expense of 20. This is more than 3 million interest expense. So the interest barrier applies. By the way, and we have no other escape clauses which we can prove. There is no data on the two others, so let's assume they are not fulfillable. The Ebitda, well, the earnings before tax and all the like. Let's have a look. We have 20 million plus depreciations. That is only the tax amount, plus the net interest amount, 20,450,000. So we have 48,450,000 Ebitda. And now 30% of that is, let's take a calculator again. That should be 14,535,000. And that means that's the limit. The interest paid net was 20,450,000. So the difference, which is not deductible, is 5,915,000. So tax profit changes by plus 5,915,000 to a new tax profit, provisory tax profit now. Oh, okay. Then we have additional things. Now, Ebitda carry forward. Ebitda can carry forward from former years can be used this year. So minus 1 million, the Ebitda carry forward can be used for up to 5 years in the future. So both Ebitda capacities which were not used can be used here. So the profit goes down to 22,950,000 remaining profit. That means only 2,950,000 interest cannot be deducted, and that will be interest carry forward to the future. And now we have a next step. We can think about the donations. 20% of the tax profit is now 22,915,000 times 20%. And that is something in the area of 4.5 million. Now paid were 500,000. So deductible are 500,000. That brings us to a new total of, oh my God, 22,415,000. And now we end up with an interest, not an interest carry forward. It has a loss carry forward. Deduction. In the first step, we can deduct 1 million. So we have now, 21,415,000. In the second step, up to 60% thereof can be offset by the loss carry forward, which remains. That loss carry forward was 20 million. That was 19 million left. So we can calculate how much can be offset. So 21,415 times 60%, that's 12,849,000 can still be deducted. And that leads us in the next step to 21,415,000 minus, what was it? 12,849,000 849. And that leads to a total result of 8,050,566, which can be regarded as taxable income. And that's the final one. And now corporation tax. Paragraph 23.1 KSTT is 15% of 8,566,000, and that will be 1,000,000 to 8,4,900. Trade tax here assumed to be, let's say, 14% or so. I didn't even mention that, so we can't calculate that properly. Okay, so then we would be finished here. But for trade tax, well, there would be some consequences still, because trade tax consequences mean, let's assume it's 14%, just to, then we would have 14% on the taxable profit, plus 1/4 or plus the add back effect of the deductible interest under paragraph 8 number 1 letter A of the Trade Tax Act. Deducted interest was, well, how much did we deduct? We had interest payments of, how much did we have? Let me look it up. We got 15 million to the Italians. We had 5.5 million to the banks, and we had nothing else. That was the interest which we paid. Then we could again deduct 3 million old interest because of the interest carried forward. And that is indeed an interest amount which was deducted from this year's taxable profit. So here we end up with a high amount. Let's call it this way. With no, I made a mistake. Old interest because of the interest carry forward rule. No. Sorry, that was a mistake. It was not interest carry forward, it was the Ebitda carry forward. That was my mistake. So that, no, that didn't increase the interest, but then we had a bit of the interest payments which were not deducted. 2,915,000 could not be deducted. 2,915,000 could not be deducted. And so the total deducted interest was 15 million plus 5.5 million plus, no, minus 17,585 minus a free allowance of 200,000, then we end up with 17,385 times 1/4 will be added back to the trade tax base and also taxed with trade tax. And we don't know exactly in this case situation here the trade tax rate in case of let's say 14%. That would lead to additional an additional amount of approximately 600,000 euro. So that gives us an overview about what happens here in that case. Okay, that's enough for this time. Thank you for watching this training case. Here I made a small variant. Here probably then everything changes. First, I told you, in addition to what we had before, that the trade tax rate in Xanten shall now be definitely deemed to be equivalent to 14%, and then I changed the credit amount which the subsidiary in Ebitda got from 1 million to 10 million. And if you want to practice on your own again, you can try to find out what changes now. Thanks for watching. Hope to see you soon back again here on this channel. Till the next time, goodbye.